Hey guys, I'm Hunter with Nelson Insurance. I'm going to go over what kind of coverage you guys need if you are a motor carrier with owner wrappers coming onto your authority. So I get a lot of people asking me about this. What kind of coverage do you need? And what does it do? Why do you need it? And all this sort of stuff. So I'm going to just go over this here real quick. When you guys are a motor carrier here, okay? You guys are gonna have AL, auto liability, and MTC, motor truck cargo. If you guys use this slang with your insurance agent, they're gonna be dang impressed, okay? So the auto liability is going to follow the MC number. And so even if there are owner operators leasing out to your authority, the authority holder, the motor carrier, is still going to be required to have that auto liability because it's following their coverage. Your guys' MC numbers on the bill of lading, all that type of stuff. And I'm even just going to throw on here real quick GL, and GL is general liability. Not required. MTC, motor truck cargo, and auto liability are the ones that are required. And so that's why I threw those on there first. And then the same thing goes to the cargo. It's the cargo needs to be under the motor carrier's authority. And so there are all sorts of different ways to do this, but the motor carrier needs to have these coverages here. And, people are keeping percentage of revenue. Some people are billing the owner operator for the insurance, all that type of stuff. And so the owner operator is going to be on two different insurance policies. And you got to think about how this all comes into play here. So the owner operator now, what kind of insurance do they need? They're going to need NTL, non-trucking liability, otherwise referred to as bobtail insurance. And then you have the physical damage. Since the owner operator is not going to own that truck most of the time, then the owner operator is going to go get physical damage because it's going to be their truck, right? I suppose you can figure out some way where if you guys own the truck, whatever. But the physical damage is going to be by the owner operator because it's their name on the loan for the truck, all the type of stuff. It's their bank who need the insurance, and so they go get the physical damage. And so hopefully that quickly just kind of summarizes the insurance there on who's requiring what and who needs what. So I'll get into this here real quick. The physical damage is obviously not required. Just it's all on the owner operator. For all the motor carrier cares, they have it, they don't have it. It's their deal. It pays for their truck, whatever, right? But why do they need bobtail insurance or non-trucking liability? Non-trucking liability is going to come into play when they're not on the bill of lading. That's why it's called bobtail insurance. It comes into play when the load's done, they're running the gas station, they're running home, they're doing whatever, and that non-trucking liability is going to be way, way cheaper than the auto liability. You're going to be anywhere from $500 to $900. You can even get it for $450. I've seen it for the non-trucking liability. And versus the auto liability is going to be anywhere from $5,000 to $15,000. Really just depends on where you guys are at, right? So that's why you need these two coverages here. And why do you care about this as a motor carrier? You need to have this coverage because it's your guys' name on the side of the truck. If they get into an accident and the owner operator does not have non-trucking liability, they're going to go to the next person in line, which is going to be the motor carrier. So you have to enforce that these owner operators have this insurance, right? And so one way you could do this, what a lot of people do, is they just, hey, go find insurance. They call Progressive, give the motor carrier a COI, day's done, right? Only problem is you never know what's going to happen there. It's the same reason you have filings for insurance. What happens if you provide a COI and the insurance cancels, right? What happens if it cancels? What happens if, there's a number of things. It could non-pay, it could be voided, number of different things, right? It could be written incorrectly. If they call an agent who doesn't know what they're doing, doesn't write in the correct policy, it's not going to work out real well. So one way you guys can get around this is called a master policy. And this could even incentivize owner operators to come onto your plan too, because there's all sorts of issues of, like I just talked about, what happens to the insurance, what happens if the insurance is not in place. What happens if they can't find something that's cheap? They call Progressive. Progressive is usually not the most competitive on non-trucking liability. They can go find it for half the price through a master policy, through a big agency. And the other thing too is, like I said, it could be just tough for them to find insurance, and it might be kind of expensive even for non-trucking liability. So what you guys can do is get a master policy, incentivize these owner operators to come on, Or, if you're an owner operator, go find somebody with a master policy, because you might be able to find a larger policy with cheaper rates. I'm going to give you guys an example here. Progressive, you might be paying $900 to $1,100 or something like that for the non-trucking liability, and they might come out with a 8% rate. So I'm going to do the math here real quick. Let's say you're calling just like an insurance company directly, okay? And they're coming out with the NTL, excuse my bad handwriting here, at $1,100. And then this guy's got a new truck. Let's just say, let's not even say it's new. It's just a half decent truck here, right? Let's just call it $100,000. It is not uncommon to find $100,000 for a truck. And they might have an 8% rate, is the best I can find, just because they called the insurance company themselves. They did their little shopping there. They got $1,100 plus $8,000 because it's an 8% rate. You're now at $9,100. So this owner operator now is paying $9,100. He's like, gosh dang, I don't have to worry about that. What if you got him a master policy where everybody's NTL was, we'll call it $600. You could probably find it for a little bit cheaper, but we'll just be safe there. And let's say they're giving them a 4% rate. You could probably find cheaper there too. I don't want to go out and give outrageously low numbers here. I want to be, somewhere in the middle here, but these numbers are 100% realistic. $9,100, $4,600. Now you can incentivize these guys to come to you. Hey, I've got a master policy. I know the rates to be 4%. You got a $100,000 truck, do $4,000. Non-trucking liability is $600. Now you as a motor carrier know these guys have insurance. You are the one who's looking at that policy, seeing who has insurance. You don't need to ask them for a COI. You don't have to worry about the coverage being canceled. Nothing along those lines. And you just saved them $4,500 to come to you, and hey, I'm gonna make an extra $4,500 a year because we got a master policy and it's be cheaper. So that is how you can incentivize these owner operators to come to you. If you're an owner operator, you kind of know where to go look at. And on top of that, what coverages are going to be required by who. So you guys know you might need general liability, motor truck cargo, auto liability. The owner operator is going to have non-trucking liability and physical damage. So there's that. You guys could do the same thing with occupational accident. You could have a master policy for occupational accident. Hey guys, I'm going to be covering, some of these guys for occupational accident have vision, dental built in. These guys know they're going to be protected. So it's almost like a work comp policy, but not quite. It's an accident policy for these truckers. And with you're saving them this much money, you can go through an occupational accident policy. Those are typically going to run, I'll just say OCAC here. You might be looking about $140 a month for a dang good occupational accident policy. So here is that, $140 a month for a good occupational accident policy. It's not even cheaper than what this was if they went and shopped on their own. Boom, now you got another incentive. Now you got another deal, incentivize them to come on because now they're going to be protected if they get hurt on the job. And occupational accident is only for 1099s, so those owner operators. If they are employee drivers, you guys are going to go get them workers' compensation. And occupational accident is going to be a lot cheaper than workers' compensation. Workers' compensation is going to have a little more in coverage, but at least occupational accidents give a little bit of those benefits, So that is how all that rolls. Hopefully this is not too much of a mess here. Hopefully you guys understand what I'm saying here. But again, I'm Hunter with Nelson Insurance. Appreciate you guys watching. If you guys want to add owner operators, wanting to expand your fleet, please feel free to call me. We have 3 dedicated programs for master policies. I'm not talking, I'm going to go write some of the big names, who would do just about anybody. These are master policies built for owner operators. So have good coverage. There'd be a fixed price typically across the line, and it's just going to keep life really, really easy for you. Incentivizing other truckers to come onto your guys' fleet and grow your guys' companies. So again, if you guys have any questions, please reach out. I'm happy to help. I'm Hunter with Nelson Insurance Agency. We're based out of Sioux Falls, South Dakota, and we work with a lot of fleets. So thanks.